Well, hello, Patriots. I don't know about you, but with everything going on in this crazy world, there's not enough of Joe Rogan's alpha brain or enough mushroom coffee to stay focused in this financial and geopolitical whirlwind of chaos we seem to be bottled up in. But nonetheless, half a bottle of alpha brain in and a whole pot of mushroom coffee, and I'm starting to see things take shape. All right, let's get right to it. First off, this audit by Elon Musk, don't get me wrong, I believe it's not just necessary, but an absolute requirement. However, what would it really tell us? I'm certain by the time of the audit, the gold will be there. But again, what does that really tell us? It could be pledged or it could be loaned out. Don't get caught up in Geraldo's next edition of Al Capone's vault. Remember, I told you to pay close attention to central banks buying gold at a record pace. This shift from where is the gold is becoming clear. If you're going to revalue it, you must account for it. This is the answer to the question that I have been asking. What do central banks know that we don't? And stay with me here. There's a lot to cover, and you're going to want to make it to the end. This could change everything we thought we knew about money and trigger a global boom in precious metals. Here's the recap. President Trump signed an executive order initiating the creation of a U.S. sovereign wealth fund. Then Scott Bessent states, we are going to monetize the asset side of the U.S. balance sheet. This triggered banks and analysts to begin speaking more candidly on gold without bringing up a reset, and gold started to creep in an upward trend. The concern here would be, how could we revalue gold without undermining the dollar? That is simple. You can't. The dollar is in trouble. And once again, as it has for centuries, the shiny yellow metal takes its place as the undisputed heavyweight champion of the world in terms of money, not currency. This is nothing new if you've studied the history of money at all. President Jackson devalued gold against the silver dollar in 1834, which raised the silver-gold ratio from 15-1 to 16-1. In layman's terms, we did not change the weight of the gold coin established in 1792, but rather increased the silver content in the coin, putting money directly in the Treasury account. This, along with President Jackson's refusal to bail out major banks, eliminated the national debt in 1835. It was the first and last time this nation was free from the weight of financial hardship. Then, President Franklin Roosevelt also devalued the dollar against gold in 1933 during the Great Depression, making gold illegal to own privately, and with Executive Order 6102, it required U.S. citizens to exchange their gold for $20.67 an ounce before the government raised the price of gold to $35 an ounce, devaluing the dollar by 59% against gold, but essentially creating money out of thin air for the Treasury. And again, this took place underneath Richard Nixon in 1971. When he took us off the Bretton Woods system, better known as the gold standard. Something President Washington warned us against in his farewell address to this nation. This allowed the United States government to print money without it being backed by gold and silver, and only the government's promise to pay. Within only 9 years, with inflation and a weakening dollar, gold in 1980 was $800 an ounce, up from $35 an ounce in 1971. Those are all facts, and I believe you can start to see the writing on the wall. Now here comes the fun, the theory. There have been crazier talks in the past. The talk of minting a platinum coin back in 2021 with a face value of $1 trillion due to a loophole from the executive branch to raise revenue without congressional oversight. It was easy to see right through that one. You see, precious metals have always been the go-to to bail us out. Here's the question. Would we tip the scales of the national debt if the reevaluation was set at $2,950 an ounce, up from the holding price of $42 as it sits on the books now? And in each of those previous revaluations, it was raised above the spot price at the current time. Does this mean $5,000 an ounce gold is coming? You're going to have to decide where it could go. I've always said gold by the ounce is gold by the ounce. The only thing that changes is the monetary value we place on it. To get us out of debt, you would have to raise the value way above $5,000 an ounce. And I do know I've talked about the naysayers that tell me all the time, You can't eat that gold and silver tray, Boe. Yeah, but with the choices that President Trump has been left with, we got two options at this point: hyperinflation or default. Either way, I'm curious. Do you like your fiat all natural or with a little salt and pepper? There is an old saying, he with the most gold wins. We're just going to have to see how this all unfolds and how they plan to spend this injection into the Treasury account. Keep a keen eye of talks of where that money would go. I believe if you're waiting to see what happens with gold before you make a move, enjoy the lines and higher prices. Look, if you need some more information or a little direction, I'll be glad to share with you what I know. Just leave a comment. And if you enjoyed this episode, go ahead and hit the like button and subscribe, as we will continue to monitor these market developments. As always, stay golden, America.